The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon until 1 p.m. every market day, Monday through Friday. And thank you to our hosts, and we've got a really interesting market. Now, we're actually down 119 points. Let me just say that again. We're down, and we're down 119 points. A very rare occurrence. The MACD, moving average daily, is still very strong. Stochastic is at 94%. That is really strong. On balance volume made a high on Friday. It's a little bit down today, but it is oversold territory. Oversold, can stay oversold for a long time, but it's a warning to me to say, start getting ready again. This is the potential here this week for some kind of topping action is there. The weekly chart is the one that says to me, hey, under any other circumstances, we should have had a pullback last week. There was, in fact, all-time highs, a huge candle, and it extended this monthly candle, spectacular monthly candle in leg E in the weekly chart. All I've said to subscribers is, yes, we've started looking at shorts, started some short positions, but most importantly, we've still got a lot of longs. We've got a mixed portfolio, and that's what I try. Every year, I try to have us in positions in sectors that I've identified through my webinars or whatever it is, as sectors that we're very interested in, we like them, or we're not interested in them. And basically what we're looking at is the steel sector is still acting very well. We're long steel. The financials, we're long bank stocks still. You've got the infrastructure, we're long infrastructure. We've got this crazy buy that we've had since the 34s in General Motors, still long General Motors. It's at 43. I'm not even sure quite. There's so much competition to be buying cars, but a lot of people, when the economy improves and jobs improve, you'll find people will start to trade in or get that new car they've been waiting for a long time. So that's kind of what we're looking at there. A couple of other things that are very important is that within the context of the market, look, that weekly chart is still, there's no sign yet of a pullback by price. There are just one or two little technical signs that are suggesting to me that it is extended in the weekly chart. Monthly chart, I can't even talk about it because it takes a whole month before you can get a change. My suspicion here is that we probably will make a leg E to a peak E if there's no new high this week into next week in whatever the high is in the Dow. So far, it's at 26,616. That's the daily. So we're going one step at a time. We did expect some kind of a pullback off Friday's extra move to the upside. This is more than that, with the Dow down 106. Now let's just go on and I'll finish up the others. SPX.X being Monday, we want to start the week fresh, looking at these markets. I'm calling it for now a leg F. It can go to a G based on the MACD and the stochastic and the on balance volume in the daily chart. Weekly chart is still absolutely spectacular, as is the monthly chart. D's in the weekly and monthly. This is an F. There could be an instant restart. And what I've been saying for weeks now is that it's not so much the heights that we can go. It is if the indices, one at a time, start to trade under the 9-period moving average daily charts. I mean, I'm trying to make it as simple as possible. Why? Because at 2860 right now, 2832 is the 9-period moving average support. If that starts to break, it'll be the first time it's had one little sneak underneath one close on the 29th of December at 2673. And the 9-period moving average at that particular point on that particular day was around about 2678. Otherwise, that's the only time it's even touched the 9-period moving average. My thinking here is that 9-period moving average, which is essentially, if you know about your moving averages, this is very much like the 9-period differential of the MACD. Look, going up, going up, going up, going up, tiny little blip over there, tiny little blip. So that's what you need to watch. And I'm suspecting that if there is a break into the 2830 to 2820s, you'll see that 9-period moving average start to get very close and then break below the slow-moving average of the MACD, and at the same time, you'll probably go from 92% in the stochastic probably to about 86 or 84%. Still positive, but that's the start of some kind of topping action. You need price. You can't just have it in technicals alone. QQQ, the NDX 100 trading vehicle, the power shares trading at 170.30. Peak E, if there's no new high today, above 170.95. MACD is very strong. Stochastic is dipping, but still good at 88%. On balance volume dipping, but still in a positive territory. It's that weekly chart that hit resistance, and now we're going to see what happens. Make it real simple on Friday. If there is a close in the Qs, because you've got a fantastic Thursday here. You've got Google, Amazon, Apple, Alibaba. You've got a whole bunch of really important stocks that are going to be trading, and we'll see what happens. And the day before, on Wednesday, you've got Microsoft and Facebook. I mean, this is very interesting. It's an interesting week. And what I said to subscribers in my newsletter was, can't remember what I said. This is a week where we might see the Sturm und Drang start to test the upside limits, and we might be testing some of the downside. I think that's pretty much the case. So QQQs trading at 170.41, needs to close under 167 to start some kind of topping process. IWM right now is down 50 cents at 159.10, really close. It's the closest to the 9-period moving average of any of the key indices. That's at 158.61. It's at 159.10. I suspect that this is going to be the first one to start to decline underneath the 9-period moving average. For all of them, the resistance is Friday's highs, Thursday or Friday's highs. So keep that in mind. Now, this is going to be very interesting. Here we go to the nitty-gritties. Gold is down $9 at $13.42. What I showed subscribers over the weekend is that gold is based on some other factors, and certainly based on one of our gold stocks, gold is really starting to struggle a little bit. And just to show you a relationship here, it's under the 9-period moving average of 1347. It's at 1342, down 9. Hey, look at this. The dollar. The dollar right now is up, and it's not up big. It's up 54 cents at 89.60, but it is trying to make a reversal with this, not a Roman candle, it's very close, but it isn't a Roman Chapman Roman candle. But the histogram has been improving for the last 2 weeks. And the MACD is just trying to turn up, but it hasn't crossed positive, but it is trying to turn up. And the stochastic has this W formation that says at 8.45, very little strength. If the dollar, and if gold pulls back a little more and the dollar is able to get 89.91 is the 9-period moving average, 90.32 is the 50-period exponential moving average. If the dollar this week, I don't care if it holds, I don't care if it doesn't, if it even touches at 89.59 right now, if it touches 90.78 to 91, 90.78 to 91.20, it says, hey, the dollar is trying to get back to the 91.01 low of the 8th of September. That's going to be the real test to see if there's strength enough to continue, or if this is just a reflex of balance, then it makes an H pattern, starts on its way down. Basil Chapman, Tiger Technicians Hour, Dow's down 106, S&P's down 11. Yep, I'll be right back off these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So with the Dow down 101, S&P down 10, we're looking at the dollar, which is up 52 cents. And what I was saying is that this is the first bounce in the dollar on the daily chart that says there could be a little more to the upside, but it's sustainability. And the only way I can talk about sustainability is price, because it went under the 200-period moving average in January. It's sitting right on it in the monthly chart at 89.58. This is the orange line in this third to the right chart. This goes daily, weekly, monthly. Right here is the 120-minute chart. Let's just get back to this right now. So what I'm looking at here is I need price. And price is going to determine whether the on-balance volume in the weekly chart really has the strength to push much higher. But more importantly, it is the MACD. The histogram is it's better than it was on the last big pullback, and it's much lower. So that's a big positive. Positive in the technicals means nothing unless you get price appreciation. And 91.19 is the 9-period moving average there. I need to see 91.30s. I need to see it above that. That's a big move to go. It's a big move down, but in a retracement to the upside, to go from 88.44 to the 91.30s, it isn't just 3.5 points. What you're really looking at is that it's going to take tremendous strength to sustain the move, and that's really what I'm talking about. Okay, so now what I wanted to show you is that high-grade copper is in a trading band. Remember, we spoke about the great, tremendous red candle 5 days ago, and then all of a sudden you get an even bigger one to the upside with a slight extension on Thursday. Friday it pulls back to the 9-period moving average, but the falling axe, Chapman Wave falling axe, this expanding cone, declining cone with lower lows and much lower highs and much lower lows. This is the pattern. You need to see a copper in the 326 to 328 area to say, aha, it's change of trend going towards the high to make that missing leg D back on the 28th of December to 3.32. But I suspect copper's just in a trading band right now, and it's going to head towards the 3.15 area on the shorter term. That's this week. If you look at wood, which is the, let me go there separately. Yeah, let me just do this separately. So this is recycle, this is AB, this is really leg C to the upside, G/C to the upside. I'll show you something. It's even more important to see it in context with the right here. So I'm going to go to this. This is This is the long-term chart, the weekly long-term wood iShares Global Timber and Forestry ETF. Made a new recovery high today. It's up 36 cents at 77.50. 77.21 was last week's high. G/C in the weekly, same sort of thing we saw in the daily. But now you're seeing what I've been talking about for a while, that the higher interest rates, which we'll look at in a moment, is affecting the Philadelphia Housing Index, HGX, trading down 7.44, 354. I featured this for my subscribers to my opening call. Let me just show you something here. Yeah. I do a lot of work over the weekends. I haven't actually been writing and sending as many charts as usual, but that's not to say I'm not doing the work. Why? I don't think you need to be sending out charts all the time. But let me just show you this right here. So this is what I featured over the weekend. I showed the chart and I discussed it. I discussed it in terms of the divergence between the iShares, the iShares wood, WOD, running to new all-time highs with the HGX, but then all of a sudden you got a red candle. And that red candle said, uh-oh, there's a change in trend, and the change in trend could be coming from, let me lift this up so I can show you what else I did, from this. And that's my triple yield chart. My triple yield chart is the chart of the 30-year. The white is the TYX 30-year T-bond, 30-year T-bond yield. It made a peak A and a B and it's pulled back, and then it's made a sub A and B, and now it's in leg C. But that leg C will have an overlapping wave. It'll have something really positive. It's like two streams coming with confluence coming together, making a powerful move to the upside, so that if it goes just above, what did I say that was? Oh man, I wrote it down. I can't see it. Let me see in real life. Here we go, real life. Yeah, and if it goes above 29.80 in this leg C, it reactivates the old peak B because it never made a lower low under the initial starting point. And all of a sudden, you've got something that's really interesting. Why? Because you've got a C that should go to a D. That's like at least 3 weeks worth of upside move in yields. That's why I think that you're going to see some impact, negative impact in the housing sector. So leg D in the 10-year, the brown, that's the TNX, 10-year, it's a very important yield, leg D. And then the 5-year is hustling behind it, but only in leg C. So together with the 30-year and the 5-year, we're looking at the chance of, it doesn't say how high, but it does say high yields, and I think that's going to impact the market. Let's just get back to our story here. So I wanted to show you the crude oil. Crude oil right now is at, it's down, yep, it's down 69 and 65.44, making a peak, has made a peak F. I'm pretty sure that's going to be an F. I can see a pullback now. I was asked the other day, would you short crude or the USO, the United States Oil Fund? I said, absolutely not. I'd be waiting for some kind of a buying opportunity. If you're a real short-term trader, maybe you can get a point or two out of this 2.5 points. I'd rather be waiting and seeing whether or not I want to buy. I wouldn't confuse my mind unless I'm a short-term trader. And if you've got the 120-minute chart, yeah, it's got some support, could bounce a little bit and then go a little lower. But to tell you the truth, I would keep this in mind as something that rather a possibility to buy than to short. I might change that tomorrow if this closes under 64.70 today to 65.44. If it drops another point, I'll say, you know what? Maybe it's going to be a little deeper, and that is a peak F, and there's a real good chance you're going to test the 62.50s. All right, well, let's get on with our story. And our story says the TLT, we looked at the yields. Let's look at the TLT going to a leg D to the downside at 122.59. But if you look at the TBT, which is the inversion of the 20-year Lehman T-bond fund, it's making its leg D. Now, at D on the upside, in the daily, only leg C in the weekly, and the inversion of the TLT, the Lehman 20-year T-bond fund, is there a chance that we're going to get another switch? Well, the yields seem to say, yeah, you might get a little bit of a pullback, but they seem to be higher highs to come. So the TBT is really the play at this particular point as I'm looking at it. Okay, So we've covered a whole chunk of stuff. Just real quickly, I don't know if I can get to it. Let's see if I can do this. This is the 10-minute ESH 18, the March E-mini. I suspect that a chunk of the selling has been done for the day in this phase. Now it's to see, is there residual strength? If the E-mini at 2862.25 down 12.25 is able to get to the 2866.80, 2866.75 to 2867.50 area in the next 15 minutes, I suspect there's going to be some attempt again to try to go higher. I'll talk about the bigger picture in a moment. We'll be back. Basil Chapman, Tiger Technicians Hour, 1095, S&P down 10.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, anyway, I'm looking at the UNG. The UNG is the United States Natural Gas Fund. It's made a little doji D. It's got a down candle today. It's holding the 200-period exponential moving average beautifully. Bounced off it, in fact. The MACD strong, stochastic strong. Weekly chart, I don't even want to talk about it, but it has the potential to have this as a real leg A and not a single leg A failure pattern. I like it. I like it very much. And I like it in the context of the cup formation forming in the monthly chart. However, at this time of the year, January, I'm not sure what the history is. The history says that you could have a good years worth of up move if you go from last year, but it's been downhill for ages. There's no, I don't see a sense of seasonality here that I could really trade. So I am looking at this and saying, on the monthly basis, trading at 26.77, unchanged now after dropping quite sharply. I like this very much. I would not be shorting this. I'd be looking to buy. I think that it is acting very well. And if it's able to go from 26.77 right now into the 27.45 area, 27.45, 27.52, I wouldn't be surprised if over the next few weeks it goes up to tackle the September 22nd high of the 27th at 27.92. That's only a point away. It should do that in a quicker time. Yeah, so that's the way I'm looking at it. Now, I'm going to be also, so I had other questions. Okay, so here's a nice statement. GT says, 400 trading days without a minus 5% decline in the S&P? I mean, this is historic. And then he says, 100 trading days since the S&P's minus 0.6% session. Yeah, this is amazing. It is. So, what can I say? It is historic. Bob asked, well, what about Caterpillar? So I spoke about this. I'll mention this a few times over the coming weeks. Caterpillar fails again, down forward, 162.87. Made a peak C1, peak C2, top at 173.24, and then repeated at 173.10, just 14 cents lower on the 25th. And that was a failure pattern. It's coming down quite sharply in the daily. Weekly is at a peak D. Monthly is in a leg D. But I have to tell you, it's only giving back about like a month and a half's worth of trading. But it's done it very quickly. That was one. Deer's the other. Deer at this particular point is DE, trading at 170, down 1.39. Did it make a new high today, or is this a double top? It went to 171.96 on Friday. 171.95. This is a potential 2-bar Chapman wave reversal. I'm watching this closely because the MACD's dipped down. Stochastics at 88% good, but turning down, and the on-balance volume is at the highs. But this is something that I have to watch and monitor closely. Both of them have good weekly charts, but wow, this is going to be really interesting. Why? Because at 170.10, it would need to get to the 165 level. That's 5 points from here, and it would need to get to it by the week around about February the 5th. And if it does that, it's got a rollover pattern. So the other two in that sector are Boeing, and Boeing right now is also down 265 at 340. And I've been suggesting there's an H pattern here in Boeing. I think that it's starting to weaken. It's a leg F, a peak F actually in the weekly chart, that there's no new high this week. And instead, it starts to trade not at 340, but down at the 331 level. 331, 340 to 331. No, that's way too quick. 336, 4 points down. It says, uh-oh, be careful. It's under the 9-period moving average. Caterpillar, what am I looking at? Dear Caterpillar, is your Boeing BA, what was the fourth one? I always put it in my newsletter. I should know it. Oh, Alcoa, of course, Alcoa. Alcoa is already started on its way down, and Alcoa is running a little bit up 25 cents today, but it's gapped down, hasn't filled the gap yet. Made a high at 57.50 on the 12th of January. It's trading at 54.25 right now. No big deal, but for Alcoa, it is actually a little bit of a deal. All right, so a couple of things. So that was that. I hope I've covered it. The Goldman Sachs. Goldman Sachs trading right now up 3.50. Oh, up ABC. I looked at it over the weekend and I said, gee, you kept saying you wanted to buy it on a pullback, and Garrett's getting away from you. Well, that's the way it is. I was looking for the test. I was actually looking for 252 to 248. It hit it exactly, but the MACD and stochastic at that time, there was a divergence in the stochastic. I just thought I needed to wait because of the market conditions. Wow, wait. It goes from 248 to 271. That's a big move in leg C up at this particular time. Very good action. Daily leg C, weekly leg F, monthly is only a leg B, and that's the reason why I've said I think Goldman Sachs is going to be one of the stars for 2018. Well, we're not in it. We have a bank stock doing very nicely. We can't complain. So Goldman Sachs trading at 271.90 up 376. Leg C in the daily. MACD and stochastic are improving. JP Morgan trading up 28 cents at 116.62. I think this is a recycle. I'm calling this a leg G/C. My thinking it's more like a, well, I don't know. I'm going to call it a G/C and where it goes. Leg F in the weekly chart. So far, the technicals are really strong. It doesn't even matter about the labeling of the Chapman wave because these are, in fact, in buy modes and they haven't shown signals just yet of any sell signal. So you don't have to worry about the notation. I'd go with the alternate count G/C in the daily at 116.63 up 31 cents. Good action. Now we need to know good action also because of the yields. SQ, question about SQ Square Inc. Yeah, this is another one that kind of got away from me. I mentioned the other day it's a potential and then just didn't do anything. It's trading at 45.71 up 26 cents. This is acting very well. There's just no question about it. Leg E in the daily and a great leg B in the weekly because it needs to go above the high it was made on that was in November, was it? In November 24th at 49.56. Let's just put that in, 49.46. Yeah, it just needs to get, I would put it this way, Square Inc. point of sale software to managing receipts. I would put it this way. Key supports between 44 and 43. That's really what you have to focus on. The upside is sort of taking care of itself because the technicals are very good. I'd put it in the category of a close below 43. It's at 45.73. A close below 43 this week says, that's a failure pattern, a potential failure pattern in the weekly. Holding like this is, what are you talking about? This is a nice deep cup formation, and it should try to test the 49s. If you had asked me, would I buy it or sell it? That's really the question. Would I buy it here or would I sell it? I'd say on a very short-term basis, even though this is an E, I would nibble at it 45.72 right here because there is a chance that it could break to the upside, and I would just put a stop in at 45.74, put a stop in at about 44, somewhere around there, because my bias right now is to think of it as a more positive chart and in an area that seems to be in favor. Basil Chapman, Tiger Technicians Hour. We'll be back now. It's at 102. And I'd like to take more of your questions. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so a couple of the next question. Oh, limited, LMT, which is Lockheed Martin, spectacular move, up 270 today, 347.56. I'm calling this a leg F. I don't see any other reason why I should change it. It's a leg D in the daily, leg D in the weekly, and a huge leg E in the monthly. And I'm not sure what's going to. I would have expected that after such spectacular moves, that the whole defense area would be ready for some kind of a breather. They haven't had that, and it's also because of, the idea, the perception that with this president, you always have to be on alert because anything could be said and anything could happen. I don't know what's going to change that over the coming months. So these guys are on fire right now. They're all working out. Look at the Raytheon trading up $1.88 to 210. There's only a leg C. If the other one's in leg F, there's a leg C. Which you probably expect them both to go higher. Yeah, leg C daily, leg D weekly, and a huge leg E in the monthly, trading at 210.79. It's just, it doesn't stop. Every time it looks like it's going to test the 9-period moving average weekly and fail, it just treats it as a trampoline bounce, goes right up, just the same with the daily. Spectacular moves. So the question there is, and I did Boeing, so UTX would be the one that Julie wanted to know about. Yeah, leg, I'm calling this F right now in the daily. It really looks, MACD's slipping. Stochastics at 82%. Leg B in the weekly, leg D in the monthly. I'm just going to stick with what I normally do here, and I'm going to put an F/C. There is nothing at this particular point to say that it's in a C and going to a D. I'd rather think of it as an F that's real close to some kind of a pullback. United Technologies at 137.25, but it's only down 73 cents. So I'm watching this. This is one of those that I would consider that if it became a short, could be a real quick 7 or 8 points to the downside from the way it's acting technically in the daily. But the weekly chart says, that 132 level is going to be really good 9-period moving average support. Next question I had was CX. So we do have CX. It's trading at 8.29. It's CMX SA, Mexican Cement Company. What I'm really looking at here is this consolidation at the peak E on the 200-period moving average and the 9-period moving average, and even the 50 now. It's in this consolidation area. It's at a spectacular move, going from the 7 area all the way to the mid-8s. I don't see any reason why I can't just have a decent a pullback. So, Tim, what I'm going to say to you is if you want to add, let me just see what he says. Basil, does this looked like a good price to enter CX. Have the best of days, Tim. So, Tim, what I'm going to say to you is, if you've got patience, the reason why I don't think it's going to go up, unless there's a spectacular discussion about infrastructure and it's cemented, this kind of thing is mentioned specifically. I think you've got a little time here, but because we're talking 20 to 30 cents, I'm going to say to you, look, because if you're like me and you're looking at this as a potential, as long as it holds 7.80, I think this is a potential weekly steady move up, higher highs, higher lows. My thinking here is, why don't you start a small position here? Because I know that you also look longer term at 8.30, realizing that the test of the low today at 8.18, it's very possible it could do that and even go a little bit lower. That's why I just say a starter position. What I really would be looking at is between it's at 8.30 right now, between probably between 8.20 and 8.08 or 8.10, somewhere around there. Let's look at it again. That's where I think your real starter position is. If you aren't in it now, that's where I would probably want to put it. But just in case it gets away now because of something said tomorrow night, I think, with the State of the Union speech, it could just break to the upside, or it could break to the downside. But I'm looking at it as a potential in the weekly chart to try to test the, how did I get that line? Yeah, to try to test 8.72. It's ready. If it closes above 8.72 at any point in the next, by Monday or Tuesday of next week, that's going to be really good action. So yes, start it, get in now a little bit, but the real position that you want to be starting is a little bit lower. And since we're talking 20, 30 cents, because it's an $8 stock, that's a big percentage. But I'm just thinking, looking longer term. Why? Because it has the potential to go to the nines over a period of weeks or higher. Next question, next statement actually is SMHs, which I was going to go to when I was looking at the Qs. I thought I had, but I guess I forgot. You certainly can't finish the show today without talking about SMH. Your nemesis for 9 months, absolutely. So I will talk about that. SMH trading right now down 75 cents at 107.18. It's made a peak D on the 23rd of January at 108.56. I'm not sure if it's actually finished going up. Why? Because the MACD has this M-shaped pattern, so it's showing some internal strength. Stochastic says to me, I think you're right about being short, but it's still at 73%. It's okay, it's not great. But it's that weekly chart that says that leg E with a close last week, way above 105.83, the high of the week of the 24th of November. It really looks more like a B than an E on a purely technical basis. So as a result, I've made the stop. We were short, and I've made the stop 1 penny above the high of 108.56. The fact that it's coming back a little bit today after being down over a point is now down just 73 cents speaks to some kind of internal strength. If you look at Intel, and the big deal on Friday was the turnaround because of Intel. Intel is still strong, up 40 cents at 50.48 and only in leg C after a gap up Friday, and a leg D in the weekly and a leg E in the monthly. So I think it depends a lot on what happens with Intel over the coming week. But if you look at LRCX, which is Lam Research, LRCX, look at this, sharp down almost 8 at 194.63. If you look at Applied Materials, that made a peak E 4 days ago. Lam Research at 218.48 on the 25th. If you look at Applied Materials, and it also started to pull back quite sharply. It's made a peak. I'm calling this an F for now. So it goes to an E. And then the MACD turns down. It hasn't crossed negative yet, but I'm calling this an F, and the stochastic's at 63. I think it's got a problem. The weekly's got a problem. There have been spectacular stocks, absolutely spectacular, the whole gamut of semiconductors. And I found, over a period of a year, that Intel is in its own world. It just does things completely different. When all the others were going up, Intel was failing, and when the others started to come down before Intel ran, Now Intel's running again as the others are pulling back. So it ameliorates, because of its percentage terms in the Dow, it ameliorates some of the downside. I think that this is a very toppy action that I'm looking at in the semis. I got a feeling if we don't get stopped out in the next 3 days, that this is going to be some kind of at least a short-term top in the SMHs. I'll be back straight after this final break. Basil Chapman, Tiger Technicians Hour. Let's take some calls. And Dow's down 110. S&P's down 10.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. We're back. Just wanted to show you something here in the email. Don't forget, Steve Rhodes is coming up next. We've got a great webinar coming up on Wednesday night. Check it out, front page of TFNN. Down 9.75 in the E-mini. I think it's trying to tackle the 2865 to 2075 to 2866 200-period exponential moving average resistance right there. I think that's a 200, yes. And what's even more important than this is that if it starts to push into the 2868s, there you are. You've got that left side high that it's going to try to tackle. So a couple of things I wanted to say is, within the context of where we are in the markets, from my perspective, I think that a lot of work has just been done in the first month of January. I would be looking at the candle, if I can do this right now, looking at the monthly candle, since it'll wrap up in 3 days' time, as you see this candle right here Friday in the daily? You see that extension? It wasn't there at about 2 o'clock, and then suddenly there was an expansion to the upside, and then today it gives back some. and then you got to reassess. I'm suspecting that that's probably what we might be looking at now, and then in February we give back some of the gains. Whether it's all of the gains, I don't know yet. We haven't even made a peak E, let alone a leg E of completion. We have to wait for February to see where this is, but it's in leg E right now, and I'm just watching this real closely. I'm going to make a big deal about the yields, and if you look at the FVX, look at this, FVX daily, recycled, so this is A, B. I have to call this a C right now, calling it a C in the daily. That is extremely positive. Look, and there's a C in the weekly chart. I believe that yields are going to be the issue. And the issue is going to be, what does the Fed do and how do they do it? Not that they aren't going up. They are. I mean, we're pretty sure that the yields are going to be going up. But in the meantime, back at the range, I suspect that if you're looking at like the HGX, so the HGX, there it is. The look at that, peak F top in the daily in the HGX, the G/C in the weekly, MACD and stochastic all turning down. I got to watch this real closely. I think that the home builders are telling us that the next thing to pull back will probably be equities, but maybe there's a little bit more room to go to the upside, and we'll see. And will it just be a consolidation? We'll talk about that later. Have a great day. See you tomorrow. Stay tuned.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.